Hi there, welcome to Neppy Invest. So today I'll be looking at companies on one of my watch lists. So I have numerous watch lists, and the whole point of a watch list for me is just to pay a little bit of a closer attention to these companies. So one of my most exciting watch lists, and I use this to find companies that I might invest, particularly in my sentiment and momentum strategy. And these companies are the sort of companies that have gone through a period of bad times, and that period could be anything from 20 or 30 years. I think AMP has been a turnaround story for as long as it's existed on the ASX, or it could be just a few months. So what's happened after the COVID-19 pandemic has a lot of companies have entered my watch list because they're in sectors that have been beaten down. So a lot of these companies I've got on my watch list, I'll show you today, have been in the beaten down sector, and they are definitely showing signs of turning it around. And the main reason they're showing signs of turning around is because, well, first of all, Pfizer released possible vaccine news last week, and then another company released news about a vaccine, effective vaccine today. So even some of these turnaround stories existed before the release of the vaccine news, but the vaccine just gave all these companies' share price a bit of a push, and we're definitely seeing signs of a turnaround, particularly with the share price. So let's get into it. And the first company I'll be looking at is Downer. So this is an integrated services company. So they have a lot of different sort of services they do. I'm pretty sure they have mining services, infrastructure. I think they even bought out Spotless, which is that a cleaning company? So yeah, so integrated services, I think what you call them. They have a market cap of 3.6 billion, revenue of 12.7 billion, but only an operating cash of 179 million, which seems fairly low to me based off the revenue, which either means they have very low margins or there was some sort of one-off thing this year that saw the operating cash flow be so low. So this is a company where I'm going to have a bit of a closer look at in the next few weeks just to see why the operating cash flow is so low. But in any case, this is all about the charts. So all these charts I'll be showing today are just the 6-month daily charts. So I've put out a grey line here, which is a start of a potential uptrend. So I've just joined two of the lows. So the first low here and then the next low, just join these lines up, or join the line up with those two lows. And that's the beginning of a potential uptrend. So if the share price meets or gets towards that uptrend in the future, that could be a good time to buy. But we did see a good sort of breakout. So what's happened in the past with Downer, we saw the share price consolidate between around here in June to September, so a 3-month consolidation period. You can see the share price wasn't doing much. A bit of a breakout in October, this right here, on pretty good volume too, so higher than normal volume. And then it sort of retraced and tested the trend line, and then it broke out above $5, which was a resistance line here. So around $5 to $5.20 is resistance, just because we had some selling here and a bit of selling here, which when the share price got to that level. And it went really strong through $5 on the vaccine news from Pfizer. And then we've just seen the share price remain about even over the last 4 or 5 trading days. So this company has just entered my watch list based off the technical signals. And I'm just going to see financially why, look at the financial in regards to why the operating cash flow is so low. I understand why they have large revenue, because they are probably operating a lot of their services on fairly low margins. Next company is one company you've all probably heard of, and I don't have to explain why this company took a big hit with COVID-19. I hope you're aware why. But in any case, so their share price has taken a massive hit, not only in regards to loss of business, but they've did a capital raising, one-for-one capital raising, which means current shareholders or previous shareholders, or shareholders when they did the capital raising, were highly diluted. In any case, we have seen the share price rally quite strongly again on the COVID-19 vaccine thingy. But before that, we saw signs of a potential turnaround in the share price going back all the way to early August, where we saw a low of about just above $2.50. Right now, it's at $5. And so I'm doing this video on prices based off Monday the 16th of November. But anyway, around $5 is a good line of resistance. So if it can maintain a price at around $5, and maybe even move up a little bit more. That would be very bullish. If it starts moving down again, that would actually be a little bit bearish, and that means it's failed that resistance line. So keeping my eye on Webjet. This is a sort of company where I think the share price will move ahead, well ahead of the financial news. So you don't wait up for financial signs that the business has turned around. You'll see the first turnaround, or the turnaround in the share price first anyway, and we possibly are seeing that right now. Mosaic Brands. This is a company that, as I was doing this video and put it on my watch list a few weeks ago, this did catch my attention based off the valuations here. And you see the numbers: market cap of 87 million, revenue of 727 million, operating cash flow 106 million. That's based off the previous year's results. If I ever see operating cash flow larger than the market cap, no matter the circumstances, I get interested because that's cheap. But it could be cheap for a reason. So the market could be concerned that Mosaic, as an ongoing business, could be up in the air. And that's a definite possibility. So I'm going to have a good look at this company. But over the last about month and a half, we have seen some bullish signs of the share price moving ahead quite well. We've seen two really good up days, two really good breakouts. So this first breakout in the middle of October, you can see my laser pointer here. And what happened to the share price after the breakout is very important. We didn't see any good sell-off. No large sell-offs down here. Share price went sideways. That's actually very bullish. I like to see that sort of sign, that sort of consolidation period. Some people might call that a flag or a pennant. Probably a flag, I think people will call that. And that's a very good that's a very good technical signal. And then we did this line of resistance here. I can see the share price went up to here. So resistance, how resistance works is when the share price goes up and again goes down again, people who bought here are psychologically aware that when the share price gets to the level, they want to sell out to break even. And this happens a lot. I've heard actually people say this in my own personal life. I've heard people own a company, they've owned a company, and they've said to me, I've heard this twice, when the share price gets back to where I bought it at, I'm going to sell out. And it's a very psychological barrier to your investing, to have that sort of mindset that if the share price gets to where you bought, you'll just sell out. And this sort of occasion, if the share price breaks through where you bought out, so you bought here, the share price breaks out past that, that's actually very bullish. So you're missing out on potential gains just because you've got this psychological barrier. But anyway, the second breakout was straight through that resistance line, and that's very bullish. And then again, the share price has been trading even or sideways since then. So based off the valuation, based off the share price, looking very attractive, Mosaic Brands. But the one concern is whether they can maintain an ongoing business. But I can understand why news of a vaccine was very bullish in regards to this company. Next company is Izu Media. So this is actually a company I've owned in the past. And they're into advertising, mostly, if not all, outdoor advertising. And of course, when companies are in bad times, I think one of the first things they get rid of in regards to costs is advertising. So they took a massive hit. Share price went down a fair bit. It was as high as something like $4, $4.50. Now it's down to $1.60. But this has developed an uptrend. So I've got this orange line as an uptrend, but very similar to Mosaic. We saw this first little breakout in late August, around $1. Excuse me. So a breakout through $1, and whole numbers, especially $1, can be, again, a psychological barrier to the individual investor. So they love round numbers. So we saw the share price actually trade sideways on $1 for about a month. And again, that's very bullish. I love to see that sort of thing. But even if I did see that sort of thing, I wouldn't buy in until I saw it break above the consolidation area. And it broke above that in late September. And this is sort of the area where you would want to buy in. And then it's just been going upwards since then. So very bullish chart, Izu Media. And what I might do here, if I wanted to buy in, is just wait for it to maybe test the uptrend line, which is this orange line here. It tried to test it around early November or late October, but didn't quite get there. So this company, market cap 940 million, revenue 550, so operating cash flow 335. So if you can sort of maintain a sort of operating cash flow like that in the future, market cap of 940 is actually quite good. But I'd suggest maybe the next financial year, the operating cash flow will be a little bit lower than that. Next company is Michael Hill Jewelers. So as you can tell by the name, they are a jeweler retail company. So this is another company, fairly low value. It's not quite as low or cheap as Mosaic. You can see market cap 204 million, but pretty good revenue, and operating cash flow is half of that of the market cap. So good numbers there. If they can maintain that sort of operating cash flow, yeah, market cap of 204 million is good value. So again, this is showing signs of an uptrend, which I've got there as the orange line. So a good uptrend developing here. And this is a line of resistance I put in at around 45 cents, and it broke through, gapped up above that line of resistance. I'm pretty sure this was based off some good news. I think it was good financial news. Good financial news is what I like to see, because that's a very powerful signal. And you can see the share price has rallied behind that good news, broken through that line of resistance, and this is another very bullish chart. And I think if you want to buy into this company, you'd wait it to see if it maintains this uptrend or not. So Michael Hill, another company I've got put into my watch list, another good-looking company. The only concern with this one is the volume hasn't really broken out. I'd like to see increasing volume, but we haven't seen that. Lendlease. This is actually a company I've put onto my watch list. I did a little bit of research into this company a few months ago, and I was actually a little bit excited with it. And I've put onto my watch list waiting for it to break out, and then I'd buy. But the breakout happened really suddenly. So I put this line of resistance at around $13.50, and then I started this uptrend. And then on the COVID-19 Pfizer vaccine news, it gapped up past that resistance level of $13.50 and is still going up. So this would have been a time to buy some around here. So I might buy in soon with Lendlease. I am quite bullish with this company going forward. So I might do a video on Lendlease in the next few weeks or so, particularly if I do buy in. Market cap of 9.9, revenue 11.7 billion. And see operating cash flow, just like Downer, is quite low for that sort of market cap and revenue, only $137 million. But I'll get into that if I do a video why that was low and why I am bullish. But anyway, this is another company that has broken out, and hopefully, especially for shareholders, this can maintain this uptrend. Atomos. So this is a company, market cap 180 million, revenue 44. They are operating cash flow negative. So this is a company, I forget exactly what they do. They do something about, they provide some sort of equipment for your camera. You can put this equipment on your camera to provide better quality or something, I forget. Anyway, so this is a company which I developed this uptrend. So I put this uptrend line, so I touched it once, twice, 3 times. On the 4th time I touched it, actually broke down below the uptrend. That's actually a bearish signal. So when it broke down, I was like, oh, that's not very good. You can see here we had a higher high, higher high, higher high. That's very bullish. Higher low, and potentially a higher low here if it kept going up from then. But it kept going down, broke through this uptrend, but retested this resistance level, which now became support. If it broke down past that support level, it would have been quite bearish, but it broke up higher on a very large update and just kept going up. So this is now back into a good uptrend, it looks like. So Atomos, the only concern is they are not cash flow positive, and I think this is the sort of company, because they rely on, if I am correct, people buying stuff for the camera because they're traveling, that sort of thing. They would be taking a hit because no one's traveling, or very few people are traveling, or have been traveling anyway, especially overseas. Santos. So for those who don't know what Santos are, they are sort of an oil company, energy company. This is a company I have owned in the past on a breakout of good fun. It was about 3 years ago, I think it was 2017, where This was very much, the sentiment was really low on Santos. People hated them, but they released some, I think it could have been a half-year announcement, and they became quite bullish. The numbers were quite bullish, and then we saw a really long uptrend develop. And then because of COVID-19, that uptrend was broken, and the share price went down quite a bit. Share price is still significantly higher than when I bought it in 2017. I'm no longer a shareholder, I have sold out. But anyway, of course, the oil energy company, that sector has taken a massive hit during the COVID-19 panic because no one's traveling, no one's buying oil, no one's buying petrol, that sort of thing. But you can see it's gone into this this sort of trading. So this area, what I've got here, these two grey lines, is an area of resistance. So every time in the last 6 months, it's gone into this area, the share price has broken down. So it's been selling every single time it's gone into, or twice before. It's gone into this zone, it's been sold down. So the question is, will we see that again? So if it breaks above about $6.20, that would be bullish, that would be a signal to buy. And if it breaks down below that grey line, that would be a sort of a signal that you don't buy. Anyway, a good signal to buy would be if it gets down to about just above $4.60, we see a double bottom there, potentially double bottom, which would be potentially a buy signal in itself, this double bottom. So a very large company, this, can't say anything wrong with those numbers, but some of those numbers are based off the previous financial year, so they may not be as good the next financial year. And my bonus stock is Oil Search, so very similar company to Santos. In fact, I've noticed a lot of an analysis when you look at like podcasts, YouTube videos. A lot of the experts would rather buy Oil Search over most of the other energy oil companies. I'm not sure why, but they do. Anyway, this is a very similar company to Santos. It's right at resistance right now at $5.76 or $3.76. Sorry. If it breaks above that level, that'd be quite bullish. And it looks like, just like Santos, there was a potential double bottom here. So that would have been a good time to buy when it broke out just above here on this sort of gap up. That would have been really a good time to buy on that gap up there. So that's the bonus company, Oil Search. There's a lot of energy companies out there that I think are pretty good value. Woodside's another one I could have done. Sanex, Beach, Karoon, which I think they bought a project or something recently. But anyway, a lot of opportunities out there in the oil and energy sector. And there's probably a lot of potential possibilities out there in the travel sector. Helloworld is another company in the travel sector. This company, they were located on the floor below me at work, but they're no longer there. Probably, hopefully it's temporarily. Although I think working from home is going to become a more permanent solution in our working lives moving forward. So no trend lines here, no lines of resistance or support. All this has done has broken out above the moving averages on high volume because of the vaccine news. So this runs stronger. Most of the other companies in this watch list probably also running stronger. So I'll put this on my watch list. You can see the financial numbers there. Operating cash flow is negative, but that's based off, I think, largely because of the COVID-19 panic. Financial panic. Pandemic, yeah. And the last company, I think this is the last company, is Unibail-Rodamco-Westfield. I think I pronounced this middle one right. So this is a company, look at that symbol there. They own the Westfields in Europe. So I haven't done a lot of research on this company, so I'm pretty sure it's Europe mostly. And since they own a lot of shopping malls, of course, they've been taking a massive hit. So I think the share price was something like $12 to $14 a year ago. And it's got as low as $2.50 a month or 2 months ago. And when the Pfizer released their vaccine news, the share price went up something like 40 to 50% on the day. And so very bullish signal. This is the day here. Very bullish signal. That's all I can say. Very bullish signal. And that's all I can really say about this company is it's broken out a very bullish signal, so this is a potential buy as well. So those are 10 of my ASX companies on my turnaround watch list, plus the one bonus stock, Oil Search. So if you have any questions about these companies, maybe you're a shareholder, a new shareholder, a long-term shareholder, And if you have any thoughts, maybe I've been a little bit wrong on some of these companies, what they do. I don't think I have been, but if you can describe what Atomos do, that'd be great. Otherwise, I'm not a financial advisor, so I haven't been trained in technical analysis, but I've done learning, my own self-learning over the past 5 to 10 years, and even financial stuff I've self-learned over the last 5 to 10 years as well. So if you do need particular personal financial advice, make sure you see someone who is qualified, who can understand your own unique circumstances. So it's very important. Anything I tell you right now won't suit your own unique circumstances. So that's all for today's video. Have a good day. Talk to you later. Bye.